What's going on, everybody? My name is Zach Hartley and welcome back to another weekly watch list video. In this one, we are going to dive deep into a couple of stocks that I am watching going into the week ahead. We are also going to take a look at the market conditions and the economic factors that are impacting our decision making as investors. So without any further ado, let's jump right in. Okay, so to start things off, we're going to take a quick look at the NASDAQ, and as you can see, we have actually broken out of the resistance that I had drawn last week. We have not set a new all-time high, but we are extremely close. When it comes to the S&P 500, we are pushing new all-time highs. It was a very good week for the S&P 500. Same thing with the Dow Jones, again pushing new all-time highs. When it comes to the volatility index, we are basically trading lower. We're trading in a small little channel right here, and there's not a whole lot of concern. We're basically going up and down each week, and there's not a whole lot of volatility in the market in general. The markets are doing extremely well. Bitcoin has also done extremely well over the last week. We've actually had the largest single week rise in the last 4 months, so that is very exciting. We're actually approaching previous resistance right around $48,000 and $49,000, so we will wait and see if we can break through there. If you're interested in getting $25 for free for your crypto trading, if you open an account with Newton through the link in my description and you deposit or trade $100 or more, they will give you a $25 deposit for free into your account. So think of it as an automatic 25% return. I highly recommend it, and that's where I keep my crypto, is on Newton as well as Coinbase. Next one here is West Texas Light Crude. This one is super interesting because it kind of feels like 1 week we're up, the next week we're down, and the next week we're back up. So it's pretty choppy right now. We are starting to set consecutively higher lows, which is very nice here. We're also kind of trading above our short moving average, testing our longer moving average of 50 days, and I'm watching for the breakout of previous resistance, because if we set higher lows and we set higher highs, that is confirmation of a new bull trend. Now, when it comes to uranium, this is very exciting because we are back at our basically 10-year highs. It's actually the highest price since 2008, so this is very exciting. We're up over 100% since this time last year, and I think it still has room to run. So I think uranium stocks right now are a huge opportunity. We're not going to cover any today, but I have covered them in some of my previous watch list videos. So if you want, you can check those out and see what my picks are. The next one here, though, that I want to focus on is lithium. Lithium has been trading sideways for basically since beginning of December, end of November, somewhere in here. It pretty much hasn't moved, and it's because we have an oversupply in the market and we're just starting to hit that equilibrium. And so this is putting a lot of pressure on miners, because a lot of companies either started up or made forecasts or made business decisions on the price of lithium being a lot higher. And now that it's a lot lower, it's actually down by 70 to 80% right now. That is a major cause for concern, because it means that their projections, their estimates, and a lot of their decisions might not have been the right decisions. They definitely weren't the estimates, and they definitely weren't the right projections. And so, super interesting market right now. What I am thinking about is buying the best companies in the lithium space at these depreciated levels. For me, it's ticker symbol ALB. They're actually reporting this week. We're not going to talk about them this week because we talked about them last week. The stock is on like a triple bottom right now, and they report on Wednesday after the close. So I'm going to be watching that one very closely. I'm also going to be looking at Shopify, Airbnb, and Datadog. We're going to talk about Datadog in this video, but we are maybe 2/3 of the way through earnings right now. We got a couple of big companies reporting. A lot of the major companies have already reported, and it's been fairly choppy. This list is kind of the big names here, but it's been a fairly choppy earnings season so far. When it comes to market conditions, there's a couple of red flags that are starting to pop up in the market. Number one, credit card debts, defaults, and bankruptcies are all starting to go on the rise. That is not a great sign. And it's also kind of a contradiction to what we're seeing in the stock market, because as of right now, the market is at all-time highs. In the NASDAQ, we're a couple percent away. In the Dow Jones and the S&P 500, we are pushing new all-time highs. So that is super interesting. We've got kind of a dichotomy there in regards to what we're seeing with some businesses compared to what the market is showing us. And it's actually the same thing in the employment world, because right now we are seeing a lot of layoffs. Snapchat, Enbridge, a lot of Bell, a lot of major companies are all announcing 10, 15, 20% layoffs right now. while at the same time, in Canada and the United States, the job numbers are actually coming back very strong, and it is pushing back the idea of lowering interest rates. And that's one of the reasons why a lot of people are thinking that interest rates are not going to fall very quickly. It's because we have a strong jobs market right now, regardless of what is happening with credit card debt, default, bankruptcies, and the layoffs in the market. So we've got this kind of dichotomy with regards to the data versus maybe the headlines that we're seeing out there. And so super interesting times in the market right now. Like I said, it's been a pretty dramatic earnings season so far, and we're also about to enter tax season. So if you live in Canada or the United States, there are some deadlines coming up. You want to get all your forms, and you also want to make any contributions to your retirement accounts before those deadlines approach. So definitely something to consider here. When it comes to the stock market and individual stocks, I talked about Snowflake last week. I told you I had taken a position on Friday. This is the chart that I showed you, and you can actually see my little green entry arrow there. This is what the chart looks like this week. It's zoomed in a little bit more, but you can see that this breakout has been confirmed. We continue to run higher, and now it's all about managing a trade. I have a stop loss right here around 190. I'm going to probably move that up to the next level of support and just set it right below that level of support so that I am managing my risk to reward. The idea here is that I don't exactly know how high this stock is going to go. And so I need to manage my risk because I don't want it to come all the way back down and I break even or I lose money on the trade. No matter what, I want to make money on this trade. And so I want to keep moving that stop loss up so that I'm never risking too much on the downside. That's the idea there. Next one I want to talk about here is Sphere Entertainment. I talked about these guys a few times, and honestly, the stock hasn't done a whole lot until recently. As you can see, we've got a high of $121. We traded all the way down to $20 here, and we've got a very clear bearish trend. The stock is moving in a downward direction from the top left to the bottom right. And now, just recently, we've started to form a couple of higher lows right here. We've broken out of a recent level of consolidation, and we're starting to possibly break out of this long-term trend. And so this could be very exciting from a technical standpoint. Now, from a fundamental standpoint, I've taken a quick look at their balance sheet. I've taken a quick look at their income statement. And I have to be honest with you, it is a complicated income statement. It is not something that's super simple. They actually have negative revenue in some quarters. And so I'm going to dive into it. I'm going to give you the summary, and I'm going to kind of break everything down for you in a video either this week or next week. So if you want to see that, make sure you've clicked the subscribe button and you will get notified when it comes out. But I don't know how I feel about the fundamentals of this company. I'm just showing you from the technical standpoint. We're starting to see some pretty cool things here, and we're starting to break out of some pretty strong bearish trends. When we zoom in here, you can see we consolidated for basically August until January of 2024. At the beginning of February here, we started to break out of this short consolidation period as well as the long-term bearish trend. And so I think there could be an opportunity here, at least from the technical standpoint. I'm not sure how I feel about the fundamental standpoint, but I'm going to let you know in a video shortly. If you're interested in learning how to trade and using this software that I'm showing you here, it is on Questrade. There's a link in the description down below, and you can get $50 in free commissions when you use that link. They have every type of account, so if you want to day trade or long-term invest, they've got everything you need. Next company here is Datadog. Ticker symbol DDOG. I've talked about this company several times. I've done okay with them recently, but what I want to show you here is key levels of resistance and how they basically stay true over a long period of time. You can see right here at $120, we got rejected at the end of 2020 and basically beginning of 2021 here, we got rejected at $120. We broke through it to $200 and got rejected. We came back down to $60, which was kind of similar to where we were over here. And then we rode it way back up to exactly $120 and got rejected again. We also had another rejection earlier than that in July of 2022. And so $120 has rejected the price action 4 times over the last basically 3.5 years. And so this is a major level. This is super key. We're finally starting to break out of this level. And so for me as a swing trader and investor, number one, I really like the company. And number two, this represents a technical buying opportunity because I think you can set a stop loss maybe just under support here and you can ride it all the way back up to $200. And so the risk to reward on this looks very attractive. Now, the reason that I like this company is because when you look at their revenue and you look at their expenses, they're very close to break even, and they have very consistent growth in the revenue numbers. They're reporting this week, so it's going to be very interesting to see if this trend continues. I think it is going to continue, and I think this company is going to be very profitable in the next few years. Last company I want to share with you today is CRSR. I again have talked about these guys several times, but I want to point it out to you because right now we are sitting on a key level of support around $17. We've bounced off of this level twice already. It looks like we're starting to bounce off of it for a third time, and you could set a stop loss at $16.50. You could get in at like $18. You got $1.50 on the downside, and you could pretty easily run it up $3 to 21. So right there is your 2-to-1 risk to reward ratio with a nice easy trade that you almost don't even have to manage unless it starts to run. You take out that take profit, you move that stop loss up, and you let it run as far as possible. That's best case scenario and what I'm hoping happens next week. Now, if you're interested in learning more about how to make that trade, do this analysis, and find stocks like this, I have put all of my knowledge into a stock market fundamentals course that is completely free for the first month on Skillshare. It's only 10 hours long, so you can do it in less than a weekend. And Skillshare is like a subscription service like Netflix, where you get unlimited access and then you have to start paying a subscription. You can take my course, you can cancel the subscription, get everything for free. I don't care. It's totally available. 21,000 people have already done it. 400 reviews for you to take a read through, and millions of minutes have been spent watching that course. So I highly recommend it. I promise you it won't let you down. It'll be the best free resource that you can find online, and I will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.